So one word that really stuck out in your dialogue right there was interest rates lowering or interest rates being reduced. So I think that's very interesting. Let's hear it from the lender's point of view. That, well, I guess when we think about capitalism, it's about maximizing profits, and which reducing that, it seems to go against kind of the classical notion of capitalism that we all have. So Tracy, I think this is a good question for you. Why are lenders giving discounts for sustainability linked factors?
It's a very good question. So allow me. So as Standard Chartered, sustainability is one of our key pillars. And accelerating to zero is one of our key stand. So what does it mean? We actually make public commitment to achieve net zero, operational net zero by 2025. And for our finance portfolio to achieve net zero by 2050. And with that, as a banking, I mean, with all the financing, I mean, banking industry peers, you will understand the biggest challenge is for our finance portfolio to achieve to net zero. And within that, we have made interim target for our three high carbon intensive industry to have in 2030 interim target, and we are expanding by industry to onboard, expanding it to wider and wider, including like transportation, aviations, shippings, and continue to building sector, etc. So within this hard target, so only if our clients achieve net zero, our finance emission can then be achieving to net zero. So within that, that's why we are so focused in driving green and sustainable finance. And we have also made commitments, a $300 billion commitment in green and transition financing by 2030 in order to help our clients to transitions with this. I want to also go back to a little bit on the market side, in addition to our commitments to net zero and why we are doing what we do and helping our client to transitions. Going back to the market, if we look at, I think Vina mentions about the use of proceeds and sustainability linked structure. So now at the moment, for all use of proceeds, so may that be green or GSS, these products in the market, the pricing is already the same. So what benefit we come in see additional to green pricing is actually the diversifications from investor coming into the market. That's why you often see green bond or green syndication loan going to the market oversubscribed. So you see this benefit and the market knows it. So pricing wise, there's no pricing differences for this now. Now going back to the sustainability linked loan or sustainability linked product. So this is a relatively new product in the market for the last 3 years. It has grown tremendously. I think last year, if I look back to 2021, I think globally it grew close to 4 times and Asia close to 8 times. So this is, you know, a gigantic growth in this market. And why? Because it moved away from use of proceeds, where your I think like my peer panelist mentions already in saying that, you know, it moves away from use of proceeds, where you have to ring fence your capital to designate a project like green building per se, right? And move to allow use of sustainability linked product on working capital. That tied to the company's sustainability target and journey. So from the green building sectors, I agree with GRESB or green building certification is one of the most typical one that if you use to qualify for green financing. And in addition to tie the KPI to in the building sector, what we increasingly see is the more on specifically energy efficiency improvement or electricity reduction, water efficiency, or even to embodied carbon. So really clearly laid out step by step, year by year during your lending of the time, and every year you basically align, make ambitious target. It has to be delivered above of your BAU to start with. So the KPI, the target, the SPT, we call it, the target need to be ambitious. So you the borrower need to deliver above the BAU, and every year they will have to actually send in the result or the report card per se to say, okay, I have achieved energy efficiency by 20% this year, or water efficiency by 10% this year, in order for the pricing benefit to come in. So every year during the lending, it's committed, and this is more ambitious target. And for that, in the embedded with the product is the margin, the pricing tied to it. So and there's a slight difference between the West and the East as well. So the product construct is the margins tied to the performance, the delivering the performance. If the borrower deliver this target, ambitious target, they get pricing benefit. And if they don't, there's penalty associated to it. And that is the market in the West. So there's penalty and incentive tied to it. However, in Asia, so I think over 90% of the market in Asia is one-sided incentive only in the sustainability linked loan. I don't think, I think we are still relatively early in the market, but although the growth is actually coming from this side of the world, but we see slightly more uptick in the both side penalty incentive structure in some of the leading transactions, but most of the market still one-sided. I think that's the pricing bits between the use of proceed and sustainability linked loan and the differentiations between the West and the East market.
Very interesting. Thank you, Tracy. So it's a way for you to be able to accomplish your sustainable goals, but at the same time, it seems it's also profitable.
Absolutely.
Very interesting. Just extending off that a bit more, Vince mentioned, and I thought he did a great job of explaining really the differences between green loans and sustainable loans. There is a nuance there, so thank you for touching on that, Vince. But again, Tracy, just sticking on that topic, are there any other products that are being offered apart from just green loans and sustainable loans? I mean, what else is out there?
How long do you have?
It might take a few episodes.
We have seen a lot of new product coming into market. So like you mentioned, so for bonds and loans that you know of, and we have seen that cut across thematics. So from green to rainbow, as I mentioned it. And beyond that, we have seen ESG derivative. We have seen sustainable trade, so apply to a trade finance perspective, and that's where you see the supply chain SME come in. And then in the liability side, we have as Standard Chartered, we offer sustainable deposits, sustainable CASA, like current account, saving account, and that is not just restricted to like the large corporate. With this product, we have seen the development to go all the way to retail. So in retail, we also have this offering, some sustainable deposits, sustainable CASA, and Hong Kong government this year issued the first retail green bond. So you and I can actually get into the green bond markets from the retail space. And also very topical on this topic today is green mortgages. So how developer building a building, making a decision to be green building qualify, and all the way to retail, when you and I taking a mortgage on a building that is green building certified, we get certain benefit to going into the green mortgage all the way. But and of course, ESG fund space as well is very topical from the wealth management retail side. And last but not least, let's not leave this super hot topic behind on carbon market, voluntary carbon market as well. It definitely have a key role to play, and we believe a well-functioned, high-quality carbon market can accelerate the transition process, and it's essentials in the whole net zero goal. So I stop there.
Wow, and I bet that's just the tip of the iceberg. I mean, I'm sure there's so much more in the pipeline that different banks and companies are discussing. And I think just there'll just be so much more coming out in the future. So that's,
yeah, I think Trey, just to add to what Tracy said, I mentioned about the sustainability linked loan and the green loan and the difference between the two. There are also the mirror images on the bond side, right? So we do have SLBs, and we recently did one, and we have green bonds as well. And of course, they are smaller in proportion right now, but that's an area that'll expand as well. And the other part, apart from the debt instruments, is on the equity side, which is what Tracy touched upon as well. And that's something I thought I'll highlight as well as a key area where CapitaLand is pushing, which is creating new ESG funds where we look to raise capital that can be deployed in different kind of purposes, the way we design the fund product. So there could be funds designed around decarbonization, where we raise capital with the purpose of using our real estate expertise and our sustainability experience in decarbonizing a portfolio of buildings. So you may acquire a portfolio of brown buildings, decarbonize them, enhance value, compress cap rates, and then exit it, and then the buyer continues. So the asset, like a relay race, continues to go through a decarbonization journey, right? So there could be those decarbonization funds. There could be also more renewable funds with the increase, especially in APAC, on focus on renewable greenfield generation. A lot of private capital is being attracted to that. So that's a key area as well. And then last but not the least is absolutely the need for venture capitalist money into supporting green tech and climate tech startups. And that's a huge area where we are seeing a lot of equity flowing in as well. So all of these are also sort of products on the equity side, apart from what the lenders are doing on the debt side, which I think together then create that pool and universe of sustainable finance products.
Wow. Yeah, thank you for that. Very interesting. I think we need to nudge Apriya to do another episode just focusing on that. But unfortunately, we will have to move on to the next topic since we are getting a bit low on time. But Rajesh, this one is for you. I want to really look at some of the technicalities in the real estate market. And I think this is a question that we hear quite often. Especially since HDFC operates across many property types, it would just be good to know, are there any particular challenges for a specific asset class? I remember you're speaking specifically about residential property in India. That's something that you do a lot of, and when some of the farmland that you've developed. So it'd just be good to know, are there any particular challenges for, say, residential or any of the other sectors that you operate in?
Yeah, sure. So Trey, I just want to, our business is a little bit simpler than Tracy Standard Chartered is, in the sense I'm talking about HDFC Capital, not HDFC Group. So I will come to the question you asked me, but I just want to say that at HDFC Capital, it is a simpler private equity business. So we go to our investors and we raise money to invest in what we believe is a good theme or an idea which can earn the appropriate risk returns, depending on the investors we're reaching out to. And like I mentioned, the first fund we raised had no ESG focus, but we've been compelled to look at ESG because our clients want us to look at, our clients in the sense our potential investors want to look at it. And we are changing, interestingly, our focus as far as ESG is concerned in various ways. So like one of our investors wanted that the homes that we finance, they were willing to give money at a lower rate of interest if X number of homes are sold to females or women. So if in a project of 100 units, at least 25 units are bought by women, then they were like, we will give you all the money and you all can in turn give the money to the developer, but the rates could be much lower because, that in India, that is, that can really help if a lot of the, because we want to, if a woman owns the home, then it helps in various ways, the ESG part. So there are, and then we have a lot of investors who want us to finance, who are giving us money to build small homes because they want that the home should be for the economically weaker section. It should have an impact. And, they're not interested if we go and fund luxury homes. So in fact, we funded 200,000 homes till date in India, and 40% of the homes are, let me get the statistics. Yeah, 40% of the homes are costing less than $40,000 per home. So it is, and sorry, $50,000. So 40% of our portfolio of 200,000 homes is less than $50,000 per unit. And the idea and the investors really appreciate that, because then it is actually creating a massive impact. Because if a family can get a home, there are a lot of studies which show that the entire way of how they live, what happens to them, the whole perspective can change in a substantial way. So, I just want to touch upon these aspects before I go on to the challenges that we face in residential. And I and Vince have been on a couple of other panel discussions. And the big challenge in residential is that when we finance a residential developer, they are like, we are going to sell this home. We are not going to, own it and rent it like a commercial property. And, we are not going to hold it for 20, 30 years. So like in a typical commercial development, yeah, you would build it and either hold it for 15, 20 years, or you would sell it to a potential investor who would want to hold it for 10, 15, 20 years. So if the interests are very aligned, that you invest the money to get the right, even if it costs a little bit more to get the example, you want to get the solar panels there, you want to get solar heating, you want to get the best quality of glass so that it improves the energy efficiency XYZ. I'm just giving some examples. And but in a residential, when we speak to our developer partners, they are like, I'm going to sell this to, as soon as the project is developed or even before it's ready, it is already sold. And there is an end user or a homeowner who's bought it. Now for them to convince them, okay, you spend the extra amount of money to be, and because what happens is you may not get the premium pricing in residential just because you spend that money. Things are changing. I would not say that it's not changing, but at least 3 to 4 years back, we had a challenge to convince developers to spend that extra money for this. But, there have been some recent polls where by Square Yards, which is one of the largest residential online brokerage firms in India. And as per their poll, 64% of the people who participated in the poll, they said that they are willing to pay a premium to live in a green home in India. So I think that there has been a transformation in the last 4 or 5 years, and I think it's catching up fast, but it is still a challenge at times to convince the developer to go that extra mile, especially as far as E is concerned.
Okay, yeah, I think that just goes back to not only is ESG and sustainability, it's something good that you can do for society, for the planet, but going back, I mean, just if people are willing to pay a premium for that, then again, that makes it more profitable. So contrary to some beliefs out there, it is possible to do both. So Vince, I'd be curious to get your opinion on this topic as well. Any particular challenges in any of the various sectors that you guys work in?
Yeah, I think I'll keep it short, Trey. I'll say 3. One was around education and awareness. See, when we started this journey quite a few years back, we were pretty much the early mover in this region, especially in this sector. So we were learning by doing. There weren't many existing benchmarks or templates or models to rely on. And I'm very grateful for all the financial institutions that partnered with us to together tread that journey, and we together sort of figured out a lot. So I think that awareness and education was a critical challenge when we started this journey. Today, as Tracy rightly mentioned, in the last 4 years, things have rapidly evolved. So I think that's in the right direction, but that was one that we faced. The second is really on the way the SPTs, the Sustainability Performance Targets, are structured. It can vary really from being very simple to being quite complex, and which indices to go for. And because we are so large, we have REITs, private funds, 30 countries. I mean, we're very complex, right? And different parts of the business may have very different kind of SPTs. And even one underlying building could be owned by 2 pools of capital, right? And the 2 pools of capital may look at different SPTs in a different way. So how do you sort of put all of that together is something where I and my team work very closely with our finance as well. But I think that maturity and structuring of SPTs is an ongoing, I wouldn't call it challenge, but it's an ongoing consideration, especially for companies who are starting this journey new. For them, I think that'll be a key issue that they need to really think through properly. And the third, which I think gets talked about much less generally in these forums because it's a softer aspect, is about upskilling of our own ecosystem, of our staff and stakeholders, right? So this is a perfect example where the finance teams of organizations now need to upskill themselves on how to do accounting for SLLs and green finance. What do they mean, right? It's like a whole new different vertical of finance that is emerging. And you can't really go out there in the market and hire people, Tracy may be an exception, but, just hire people who are experts in this, right? So you have to really invest in building this skill set on top of your existing skill set. But for me, while it's a challenge, it's an opportunity because it allows your people to grow further and strengthen their careers by just adding this layer on top of what they already know. So I think those are probably the key challenges that we've been working through. Yeah.
Great. If I may write on this a bit more. So I cannot agree more. Talent is really one of the key challenges in the market. It's so difficult to hire ESG with financing backgrounds in sustainable finance world. So it's super hard. And I think that goes into a lot of capacity building within the firms or outside the firm. And we have seen government program coming out and subsidy coming out to really drive and retain talent in this space. And I think one of the transaction or the challenge I want to share, I think that is one of the key for the property market is where the existing building, because I think traditionally we use green building certification a lot for new build. So it's a lot easier when you are building designing and building a new structure to make it more energy efficient, water efficient, etc., to get green building certification. However, there is a massive stock on existing building in the market that need to decarbonize. I think that is the sticky part in for the building sector to really achieve net zero. And from there, I want to share one of the structure and leveraging green building certification to articulate on the decarbonization piece, which is relatively easy. Where the World Bank IFC have developed this green building certification called EDGE. So this green building certification is actually developed for emerging markets for simplicity's sake. It articulates only on three things: energy efficiency, water efficiency, and embodied carbon. And it started with 20%. So the minimum standard to going in is, in order to certify, is you have to be 20% better than the pool of the similar stock in that location, in that market. And then it evolved to 40% on the energy efficiency improvement, and then to net zero eventually. So in operation, how do you demonstrate that you exhausted, how you do the energy efficiency improvement, and then allow for a renewable energy offset to arrive to net zero. So it's a clear kind of a pathway for seeing a building to net zero. And I recently used this structure on a sustainability link lending of a developer client on a mixed building, existing mixed building, where they're going through retrofit for that over 5-year terms. So we were using this certification to basically, first they need to certify, and then over the course of when they're doing the green retrofit, we measure it to every year, and the SPT deliver, then you say, okay, how much energy efficiency it come through during the term of the trade. And it's quite easy to adopt and use, and cost and time efficiency in this one. So I want to share with that too, really how the green retrofitting is one of the big kind of market that we need to tackle, and then what at the moment in the market that is available tool that we can leverage on.
Yeah, retrofitting is definitely a hot topic today, and that's something that you're hearing more and more of. But again, I'm sure that would constitute an entire new episode of just to speak on that as well. With that being said, unfortunately, we are running a bit out of time, but I do just want to get one last word from all three panelists. And we've talked a lot about the past and the present, so it's only fitting to speak about what to expect in the future. So Vince, I'll start with you, just to get your ideas from a borrowing perspective. What do you see in the future, or what are some things to take away, or some things that you see on the horizon?
Well, this field is changing so rapidly. Whatever I say may be proved wrong a few months down the line. But look, I think the SLL criteria will become stricter. They'll become more quantifiable, more detailed, and I think there'll be more scrutiny on the type of projects that qualify under green financing. And all of this is really to address greenwashing concerns, because this is an area where if the parties are not careful, they can easily slide into greenwashing. So I think that it's going to get tighter and tighter. The second thing I would say, absolutely agree with what Rajesh said, and so glad to see what HDFC is doing there. I think social financing and pegging to social indicators will become more mainstream. Right now, it's still very E-driven, but I'm very sure even on the non-residential business, there will be more creative products coming out linked to social indicators. And the third thing I would say, or rather I would hope, is the interest rate savings to start varying based on your level of achievement. I mean, today it's sort of more binary. You either get it or don't. But let's say if I exceed by too much margin, I get even more savings, right? So I think if it gets pegged to the level of achievement, both ways, plus and minus, I think that'll even give more impetus to the industry. So probably these are the changes I see the industry evolving to.
Right. Yeah, that's a good point. And that's something we're seeing at GRESB as well. I mean, looking at our assessment, it's around 60% E-focused, but we're actually getting more and more demand to do more within S&G as well. So I totally agree with you on that one. So Rajesh, do you want to add to that? Anything you see in the future?
Yeah, so more than what I see is what I hope and what I wish and what I pray is that it is followed in spirit. So, it is not that we as lenders are, forcing it down the developer's throat. So in India, what I understand is that 22% of CO2 emissions are from the construction sector. So it's a, and like we know, urbanization is going to increase. Vince talked about, one New York being added every month, is it? I mean, that's like, and a lot of it is happening in Asia, and within Asia, a lot of it is going to happen in India. So this, so it's not only where we are there or, where we are forcing the ESG down of telling them to do it. So I really hope that the developers, take it up on their own in spirit, and that helps our cause, and that will be, helpful for everyone.
Thank you, Rajesh. And interesting, another note to take away from GRESB. So I think your dream may not be too far off. I mean, just looking at 2022 stats from GRESB, India was actually the fastest growing market in real estate and the second fastest growing in infrastructure. So when compared to all the other markets in Asia, I mean, China, Japan, some of the others in Southeast Asia, I think that's a great pat on the back for India. And it really shows the direction that many Indian companies are taking in regards to ESG. So I think that's worth a round of applause for the companies taking it more seriously. And Tracy, let's end things today with you.
Say the future is green in the general terms, so sustainable finance way. So I cannot agree more with Vin on the tightening on standards and the transparency on decarbonization and the requirement for external verification. Second party opinion is only going increasing from that side. And then I think I'll just add to that is the leverage of technology, green tech, clean tech in this space to really accelerate the process. And then last but not least, I cannot agree more that India is one of the biggest market for me in Asia, and there's tremendous opportunity and cannot wait to do more in this market.
Great, wonderful. Thank you all. Unfortunately, we do have to end things today. As I've mentioned several times, it would be great to continue some of these conversations or even have more episodes, but all good things do have to come to an end, unfortunately. So I'd just like to give a special thanks to Rajesh, Tracy, and also Vince for joining today. And of course, a special thanks to Apriya for organizing all of this. I think it's been a wonderful session, and I personally learned a lot. So thank you all very much.